Okay, g'day guys. Sam here from Trade to Prosper. I'm going to make it point form on this presentation, just get a few key points out of there for people to consider and think of what's taking place. So, looking at the USD or the tether dominance, it's a good indicator. And in the past, it's helped us find the bottom or the top, and these are aligned. So, when we look at the previous tops, next future top might be around the same as well. And as well as the bottom. So we have this scenario where I'm looking for a Wyckoff distribution, and this could actually continue up to the LPSY Wyckoff distribution. So if the US tether keeps going up, passes this 618 level, then we're going to have a deeper pullback. So it's really aligned with Bitcoin. Excuse me. So when we look at the tether, this midsection is really the key level for Tether's dominance. So if we break above this on the daily, it's likely that we're going to continue up and hit this green area, which is LPSR, and then come back down. But there's also another Wyckoff model where that could be the last effort, which is slightly above the previous tops. So that could be the bottom market, and that will probably indicate that if it goes that direction, that will probably be 9K, 8K range and the CME gap, which I'll talk about soon. So there's a model here. Besides the channel, there is a structure, a topping structure for Tether. And when we break this level, I think when we break this level of this red line, that's confirmation that we're going to a bull market. We're not there yet. So this level obviously equates to a significant level, which is our Bitcoin rejection. So that's from a Tether perspective. And if you look at that along with what I presented the other day with the SP 500, we are getting a rejection on the 20-month monthly moving average, as well as a 200. I think that's a 200. Yep, SMA or 100. That is a strong rejection area. If we can't break above that, then we are going to go down. We might get this retest on this 618 level. It might come back down. Here we have the volatility index for SP 500. It does suggest that we're going to go up, just like the other times where we found levels of reversal. So this is likely to be a rejection area. How far will it go down? That's the question. I am looking for support from here or this, trend line. And if it goes below that, if we really lose that level there, then we're going down significantly. We've got this 200 area. So these moving weekly averages is an important area to hold. If we can't hold that, then that's a bear market. So that's from SP 500 perspective. I did talk about the other day of the Dixie, and it's pretty much aligned with the US dollar, or what it is the US dollar against a number of currencies. It did not drop much. So if we look at it closely, let's have a good close look. It did find support at that trend line, which is probably the level that I spoke about before. Where is it? That channel. There's a key channel there. So if we look at this channel along that line, we can see that it's found support there. And my theory is that this is a bottoming structure. And I did talk about it the other day, that this is probably ranging sideways potentially to make a move. So we've got to keep an eye on this. That range is very important for the likes of the stock market and so on. So if this does look like accumulation range and does break up to the outside, well, that means that US dollar is going to go strong and not good for the likes of crypto. So if you look at this, and if you missed my presentation, we have a channel all the way, and I use this part as a reference to the bottom with Fibonacci, and the 618 is for finding support. and the 0.5 is acting as resistance. So that's where we are at the moment. So it's going to be difficult to gauge this, but to me, that looks like upward pressure the way these candles are at the moment. Moving on to the total market cap. As you can see, we did get a moving average resistance as well. Now, when we look at this structure, this is a topping off structure, very classical Wyckoff structure. That is our last effort there, and the neckline is very clear. This, my friends, could be a reversal, as many see it. It could also be a continuation pattern. So it can continue on, and that was my target. And if you look at that, we could potentially have the last stages. However, if we break that trend line and we break this level of moving average, that's when I'm going bullish. That's when I'm going to throw in all my money in. Until then, I'm looking for this moving average as support, and you'll see this as a 200 SMA, right? And we've got this Fibonacci level. So if it drops there, then we've got these levels all the way down. Can't tell you what it is. What I'm thinking right now is this, which is probably more explanatory. Key levels. So I'll put my Fibonacci in there. Key level was that. Again, acting as resistance. We're on the weekly. And the key level for the likes of me is this 618 level here. That is my last part. If we lose this level, we're going to drop down deep, probably to this level here. And if we lose that, so we've got the support there, and we've got the support there. The 30-week moving average is the most important part. It is equivalent to the 200 on the daily. Why is that important? It goes with this theory, the Stan Weinstein method, where the 30-week moving average, and you can see this structure, how it takes place. We break above a known level, we hit our first space, the pullback is coming back down to the 30-week. If we lose a 30-week, and we're pretty much doing this kind of stuff, we're in simplistic form, and if we lose that, looking at that chart, it's going to be significant. And that's very close to the 618 level as well. So, and you can see our weekly candles. That is our weekly level. If we lose that weekly level, we've broken market structure, and that's the whole thing. If we break market structure, we could be ranging for some time. I'm not saying we're going to go all the way down, but there are scenarios where we need to keep in mind that it's very possible that this could come down all the way down here to the 19,000 range, 18,000, high 18,000 to 19,000 if we break this 20,000 or 21,000 range. So that aligns with here. If you can see that, we can't lose that level. So we made a fair bit of effort to keep that. Do I feel that we're going to drop below there? I don't think so. I think we might actually get some support here because the Dixie hasn't really moved much. It hasn't dropped, it hasn't moved. So what we're doing is we're playing out head and shoulders. So my idea is which head and shoulders is it going to play out? Give me a sec. Okay, here's an example. In the past, and I remember this very well, in 2020, we had this head and shoulders. So if we look at it, it's a complex one, but it's a head and shoulders. It reached its target. And this is where I am a bit confused as to what it will do. It hit the head and shoulders. It hit the 20 weekly moving average. There we go, EMA. And then we found support. We were there for probably a week. Yeah, just trying to hold it. That's what I'm expecting here. If we get something strong, support on this 30-week moving average, similar to this, and then we start seeing something like that, then we could be bullish. So this 30-week moving average is there. 30-week moving average here is down there. So the 21 is above the 30-week moving average. Here it's the other way around, so it's not favorable. This is my 21 weekly moving average, which is also aligned with 20k range. This head and shoulder target, if we play this head and shoulders, it goes a bit further down, and it really comes down to this level here as well. So 30-week moving average, which aligns with this. So we can see it's a range. The range is very important, and we can't break this range. And that aligns with my previous chart. That's pretty much aligned, which is up closer. So here's a chart that probably does a better job. Now, in the past, or I'm just using the head and shoulders here as an example, because we are playing the head and shoulders here as well. And you can see that how the moving averages are flipped around. Here, it's pretty much the RSI has given us the signal of the breakdown on the 2-day chart. Here, we had the same breakdown, 2-day chart, and it came down to a point of support. This wave trend, you can get it free on TradingView. It has the same, it's a good indicator. We've broken down and this is doing the same. We've broken down. It's likely to come down and then move back up. I could be wrong. We want to see this crossover to be back to being bullish. Here we can see that the head and shoulders played out to the T. It went perfectly to its range. So that head and shoulders is, if we look at it close up, let me just do a 12-hour chart, probably a bit more accurate. So if we play this head and shoulders right there, it's actually pointing to this 200 EMA daily. So it might wick down there, get that, and move back up. So that is a possibility that we have this range as a strong support. Basically, that's what it's saying. And if we lose that level, we're going to go down deep to the 21 moving average down here. Now, here's another thing that a few people have picked up on, and let me bring it out. Let me see if I can find the CME chart. Here we go. The CME gaps. So we got a gap here, and we've got a gap here. So that's favorable that we're going to get there, and we've got a gap here. Now that gap is in the 20,000 exactly as per the stuff I just spoke about. So that gap is there. Let me just chuck that indicators in. I should get my moving averages coming out. Where's my 200? That's my 200 and the daily. Okay. And I need to get this to the weekly. Okay, so that weekly is pretty much in the gap area. And I can get rid of these 50 moving averages. Don't need them. So the 20 moving average is there. I'll get this weekly as well. All right. So from a CME gap perspective, it's actually, if we just get touched it a bit, so let's have a look at this. I'll put that back in. So it is our 618 level as well. So the CME gap is in the 618 level. If we lose this level and don't hold, the CME gap chart is slightly different, as you can see, because it's not up to date. I'm not sure it's live, but the 618 level is where our gap is. So it might just come back and fulfill this with a wick and then come back up. So we've got to be on our toes on this one. And you can see, obviously, this is a strong support level historically. So we were there for 3 months, really. So this should be a strong level. The 21 moving weekly averages should hold up. So, but that is a strong drop, and the fill up, as long as we fill it, a bit of it, it's considered filling the gap. So this 618, 20,200 is very possible, and it might be enough to get a reversal. So I would potentially, if it comes down that low, I'll definitely take the trade, and then we might just go back up. It's not ideal. Like I said, the 30 weekly moving average is ideal for a bull market sign. If we come down here, it's likely that we range more. We probably range more, and it might just come down a bit more. So we might just get an A, B, C type of thing, and then find some structure that breaks up. Worst case scenario, we might come back down. Never know. But the CME gap, I'm not saying we have to fill it, but it's there, and we've got to be mindful of it. Now, you can see from the top to the bottom of this structure is actually the target that worked from there. So the measured move has been there, and that was a good response. As you can see, this is a bullish move. I am bullish. I'm just looking for a reversal entry. So we can play the head and shoulders. You can play the head and shoulder game, but you want to make sure that you get a reversal here taking place like this. A lot of support in here. If we fail to get a bullish candle or a number of candles to show strength, because the bears have jumped in, just like here, the bears have jumped in, shorted, and this is the start of the bull market in 2019-20. Was after the COVID capitulation. We had a key level of resistance, which was the 10K or 12K. Yep. And then we found support on the 10K. So this was really a good test for the bull market to kick in like that. And this is going to be exactly the same. A real good test. You can see the 200 moving average acted as resistance there, and we got this massive. Here's a few things I want to talk about. We also had this macro trend line, this one in the blue, if I can get it. We did not pass it, so we cannot, and it's not a bad thing. I think it's a good thing that we've got the rejection. Now it's a key. So there, and there, perfectly resistance along with the 200 moving average. That is great because the next time we hit it, the fourth touch is likely to go. It's likely to break through. We might have a bit of congestion. If it comes down all the way here, we might get a bit of a congestion. And I think tapping on this line is the fourth touch, as my rule is. Fourth touch or in the fifth touch. If we get a rejection on the fourth touch, then we're going to go down hard. So we've still got time. But that's if we lose this. If we go back up like that, we're still going to find resistance. And you can see that now this is going to be the resistance level. So 23K is a major resistance now. So that's from a volume perspective. It is a major resistance, and we couldn't hold it. So when we go back up, it's going to be a major resistance, and I wouldn't be surprised that we'll come back down to this level. So let me clean that up. So I'm giving you the scenarios that likely possible play that's taking place. I'm very comfortable with the trend line. I really made a good effort to get it right. We did break above it, and it was just not enough strength to go through it. This is the inverted bar strategy. You can look it up on the internet. So the fact that this is coming to, so what we have is this is the first cycle, touching it. This is the second cycle, touching it. And the third cycle is usually shallower. And so it does interest me that this is likely to be the area. I just see that if we were to get back up here, we need to see strength, like a few days holding at this level to be bullish. And this 30K, 30-week moving average playing an effect. Now, if that doesn't hold, then we become more bearish, and then we might just do that. So it's not favorable. I do believe we'll get another swing, but I'm not favorable, and there might be a shorting position as well. So keep that in mind. And then if we break that level, we come to the 21 weekly moving average. We should find support there. And then I'm hoping that we get enough buyers to come in. And what happens is, just like here, when there were shorts taking place, all these shorts thinking that, okay, this is going to be a continuation. So this was a short squeeze, pushed it up. As price went up, all these short stop losses were triggered. So what it did was it just got rid of all these, squeezed out all those shorts, which was in the billions. And that was the move. It wasn't the buyer's move. It was the shorts being squeezed out, and the stop loss has been triggered. That's why we went very quick. Now it's back to neutral. I think that was the FTX debacle that did it as well. So the market is, in my mind, back to a balance. And what's been pushing this price, as I understand, is a spot market, not the futures. So big money is it still coming in? Probably not. I think that the big money will come in when we break this key level. That's when everyone will go bullish and leverage trading. So I think we're still going to be in this range. This is the range that's going to decide what takes place. Hopefully that makes sense. Now, what have we got? Ethereum. Ethereum is no different. Ethereum actually is a bit of a puzzle. So this is the Wyckoff structure, topping structure, very much like Bitcoin. The measured move. The neckline got the rejection, and this is phase E on the Wyckoff. So this could go down if we lose this moving average. Again, this moving average. So it's synchronized, and that's our 200 EMA. It's above it. It needs to hold it. So if we lose a 200 moving average, we're going to go down hard. So that is my perspective on Ethereum. We have definitely a resistance level there, very clear. Previous top, very similar to Bitcoin, and we've got this 200 moving average acting as support. So how do you enter this trade? I think that if you break this RSI, give or take a bit, maybe like that, or the moving average on the RSI, the blue line, if we break above it on the daily, then we'll probably get somewhere for Ethereum. But it seems to be playing a different structure. Seems to be a rising wedge of some sort. Now, from an alley wave perspective, and I probably didn't discuss this, I should have. If this is a wave, say this strong move to me is wave 2 to 3 from a bullish hat. So we had our one. Hold on, give me a sec. Let's just get that again. The theory is that's our 1, that's our 2, 3. This should be 4, and hopefully 5. 5 somewhere around there. So I'm looking for that as from a bullish perspective if this holds, and then we get a correction, ABC, and then and so on. Continue on. 5 could be all the way up to the 1.2, I think, if we get that breakout, and then even higher potentially. We got these ranges. So that's how I look at it from there. However, I also have my bearish hat, and if the US dollar does what it does, and if it does go up and continues to go up, and I'm having my bearish hat, I had wave 5 down here. So this could be wave 3 to 4 and wave 5. So this is well known on the on social media, Twitter. There is a number of models that we're looking at. This could be a way 3 to 4, and if we can't break this level, it's definitely possible, because in the past, as you can see, if I was to look for the weekly, this is a weekly copy. This bottom of the channel is likely to be a strong support level because it had it before. So if we go to the weekly chart and I'll bring it out, you will see that. And so the bottom of this channel is playing it. Actually, I'll get on. Okay, that's the rainbow one. So if I was to do this, hold on, give me a sec. You'll see that. So in the past, we broke that level, and we need to hold it to go bullish. As you can see, this is the weekly chart, and that's the bullish perspective. We need to hold this level. Like I said, if we don't hold it on the weekly level, then it's going to come down. So this weekly level, all the way through, it was a sign of a bull market. So that's okay, long as we don't drop it on the weekly. On the daily, on the 3 daily, we can't use that chart because that tool works only for the weekly. So what I did is just map over it. And so when I map over it, those channel is there, and that those levels are there pretty clear as well. I'm not going to go bullish or bearish. We could be in this range for a while. It's even very possible that we can come down much more. So, but we have strong levels. If we wouldn't stop doing that. So we have strong levels, and we just got to keep an eye on the US dollar and SP 500. So if we break this level, then that's not good. That's going to be a sign of going higher. And what I did in the past, one more chart I'll bring out. That if you missed my presentations, I'll just bring it out for a sec. Give me a sec. Where is it? I'm looking for it. Where is it? This chart. Okay, here we go. So this is a chart that I spoke about briefly the other day. On the top, we've got Bitcoin. On the bottom, we've got the US dollar. And the key part to what I've taken is when Bitcoin was in this range, US dollar was ranging as well. And when the US dollar broke out this range, which was a clear accumulation level, as soon as it broke out, we lost the top. And what my guess is that big money took their money out of crypto and put into US dollars, US bonds and all the rest. And that's where the US dollar kept going because that was more guaranteed, big money, better returns, less. So that's what they did. Very clear that was a pivot point from the US dollar. Here, similarly, this was accumulation, and as soon as it broke out, the dollar went up, very much like Bitcoin back then. Soon as it was dropping, as soon as it came to a particular level, it came down. Not as much, but this one is much more. And similarly, with the bull run, when the US dollar is dropping, did a topping structure and broke out, we got a bull run. So here, very similar. That was our previous top. So that's where we're finding support on the US dollar. It's also probably the 618 level as well. If you look from a Fibonacci perspective. No, the 0.5. Let's just do that, reverse that, see if it gives another. Okay. So that's where our resistance on top. So it's finding the support on the 0.5 level. So let's just clean it up a bit. Too much Whoops. So if we look at closely, if it does that, no, it doesn't do that. I've got to change to regular. Okay, that will do it. And you can see previous support, and it's a fib level. We found a bounce. Now, if this ranges, I don't know what's going to do to Bitcoin. Bitcoin can range or it keep going up. So the correlation is going to be difficult to say how that will respond, how crypto will respond. But I gave you my clear levels of if we lose a key level like that, the 618, or the 21, or sorry, or the 200 moving average, this is going to be also in line with my theory, if that makes sense. Yeah, well, what a day. Yes. If you've got any questions, let me know. So what I've done, I'm just mindful of time because I've got to go soon. I've talked about Ethereum, very much the same. It's hit its target, basically, roughly there. I thought that'll be the case. If it drops this 200, then Ethereum is going to come down, and that's going to do a head and shoulders in a different way. No, sorry, a rising wedge. That is a Wyckoff structure, buying climax, up thrust, and the secondary up thrust. So our neckline is there. From a Wyckoff perspective, that is our range. If we drop that range, it's going to go down. It's going to come back up here, but it's still going to go down for Ethereum. So I'll look at that as a Wyckoff continuation pattern. It can continue on, but that's the last part. If it drops there, it's going down. And I suppose that will go in line with Bitcoin. What Bitcoin does, Ethereum will do. And if we look at Aptos, I did call it the top. I go strong resistance, and I was correct. So if you look at my chart right there, it hit the 1.414. Now, from a bullish perspective, I think this could be wave 3. And somewhere down here, I think this could still come down to 1. Excuse me. And I don't need this one anymore. Give me a sec. That was measured to entry. Don't need that. So that could be a wave. So this is a wave 5, right? Wave 5. I'm looking for ABC type of correction or a 5-way count. At the moment, whoops, we don't have it. So here's the Fibonacci levels based on a few methods, and here we go. So that was equivalent. It didn't quite hit my 1.618 from another perspective. So that was a bit hard to work it out. And once we lost that neckline, it is dropping. So how much it's going to drop, I've got no idea. I think this level will be where it's now. It's finding support, which makes sense that we can find the bounce. That's a buying climax secondary test. Now the question is the Wyckoff structure, is this a continuation pattern? And if we lose this level, like the others, we're going to come down further. And it wouldn't surprise me if we lose this level. It might be just enough for it here as well. And then if we lose that level, the Wyckoff structure is complete. And what's going to happen is further down, and I'll be looking at this range around here for another move to the upside. This could be a B, and C for deeper correction, or it's just A, B, C, and then up. So there's 2 versions there. I don't know which one's going to take place, but I'm giving you the outline. What have we got here? Okay, we've done that. Matic looks like so we've got the 618 there. Matic is outperforming Bitcoin and Ethereum, and it's very possible that that might be a shorting position as well. 618 level. So this is a rising wedge, bearish divergence. This might get a rejection. You might want to take your chances. You might do that as well. So for another. Very hard position to enter, but it's at the level. We're looking at it now. Might be a good shorting position, but the candles don't tell us yet. I know I see that Bitcoin could bounce, so it's very difficult to know when to jump in for this one. Let's have a quick look what's going on. I did call this out too, by the way. That's a shorting position on our channel and my Twitter account. So if we go to Twitter, I should be able to see it. I did call out the head and shoulders. Where are we? That was an old one, and that was our entry, the head and shoulders. And I called it out that it was possible some time back. So it's very much similar, and I had that same thoughts back then that will come down here. So I had these setups in mind, and if you follow me, you might get some ideas on how to approach the market. But here it is. This is the one I put last. So the head and shoulders I just discussed, 2020, very much what I've been talking about, and that was our entry to go in right there. So that's all I got. FTM, please. All right. I've got FTM as well. Should have taken more profit if I was not so distracted, I suppose. Give me a sec. Where's my FTM chart? Okay, it's not there. I've got to pull it out. Bring up two more. Don't want to be too late. The last one, I think it was. Damn. Perpetual, okay. So too, right on the money. 200 EMA. That looks bearish, guys. Yeah, I have a rule, and it's not my rule, but a few other people's rule. If it drops more than 20%, it's likely to be a topping structure. So that's dropped 30%. Yeah, 32%. It's more than 20%, and therefore it's likely to be a topping off structure, and very difficult. So I do think this will come down more. Right now, we'll probably get a bounce, even though it's right there. It's still not, it's not, it shows a lot of weakness. So FTM, 33% drop. Hopefully I got some stop losses on that one. But yeah, I do see this potentially coming down more. It's going to be very volatile, like the other coins, I suppose. So looking at that, welcome Jasper joining our Telegram channel. So if you want to join our Telegram channel, guys, there's a bot. It's on my signature. Just 20 days free trial. Jump in and have a look. And when you first join, you won't see anything because it's what Telegram's set up that you don't see the history, but anything new you will see. So that's what I got for that. I do feel like if I was to look at this on a big picture, I think I did a YouTube one on this. FTM is still good. So that is from a non-log perspective. If I was to put the log perspective, it went beyond what I expected. So that was my 1.618. And tell the truth, if we were to do this and see where it came up to, it just fell short on the 618. And if I was to lift this up a bit more, no, doesn't make any difference. if I was to do that, actually, wrong chart. Let's look at our FTM USDT on perpetual. See what this does. Let's look on the daily. To me, this is still great. FTM, to me, see this here. It's a macro continuation pattern. The fact that it didn't reach there, I think it still might have it in it, but that is such a pullback. You can see how. Let's have a look at this. Okay. So that put it onto the neckline. It's still dropped a fair bit. The current price is there. However, that is our last support. So market structure is still there, though, right? That is our market structure. As long as it doesn't drop below there, it's fine. But like all the others, there's a decision to be made. But this looks like, just from the outset, on the macro picture, a way 3 to 4. So I still feel like 0.5 is still probably achievable. But who's to know what the Bitcoin's going to do? So this level is pretty much a strong support level, you would think. All along there, you can see how that was support there as well. So it might come down a bit further more. And you know what? It wouldn't surprise me that this is a bit of a fake out, but it's finding support there. But that is my level. So if we were to pull that there, I don't want to go too much into this. So the 0.5 is 0.5 Fibonacci's grabbed it. Very much along with that. But the 618 is probable. But I don't trust it though. So if this was to go, it's not trustworthy. Just the fact that that's there, maybe. But yeah, it wouldn't surprise me that it comes down. But then again, when it comes down to there, it's going to be that or that. So you need to keep on it. Is it a bear flag or a reversal? That's what I'll be looking for. Ideally, you want to get out when that was broken, the daily level. That was our daily level. Once you broke it, you see how it drops. So that's what happens there. Watching time. I think that's it, guys. I'm going to wrap it up because I was meant to keep this short and quick. If you've got any questions, just post them in my Telegram channel, or you or here as well on this live stream, so I can look at it later and try to respond with some words. All right. Have a nice day. Hopefully everything goes well. Talk to you soon. Cheers.